Welcome, everyone. Today, we're going to be speaking about launching your Bitcoin Treasury company. This educational seminar is brought to you by Orange Wheel in partnership with BitcoinTreasuries.net. We're going to be focusing on a couple key considerations, particularly on legal, risk, and staffing today. So my name is Ted Paulus. I'm the co-founder and CEO of Orange Wheel Advisory. My background is that I am a Canadian. I've been living in Europe for over 13 years now. My background is in management consulting. I began with the Boston Consulting Group in their energy practice over 10 years ago now, and really focused on corporate strategy for European and international energy companies, and then rejoined industry in a corporate strategy function with large businesses such as Maersk and OMV. In parallel to that, I've been a Bitcoiner since 2013 and have really focused in the last decade about bringing the knowledge of Bitcoin and macroeconomics into the world of corporate strategy and management consulting. And really excited to present to you today on this topic. We're going to be focusing on 6 sections today. So first, I'm going to introduce a little bit about Orange Wheel, who we are and what we do, and the services we provide. Then we're going to focus on understanding the broad types of Bitcoin companies out there, because it's really important when developing a strategy of knowing what kind of company you really want to be. Then we're going to focus on corporate structure. And in that section, we're going to kind of look at things like ownership and control and thinking about the legal aspects of registering a business. Then we'll go into the regulatory landscape and some areas just to be aware of when thinking about regulations as per Bitcoin Treasury businesses. We'll focus a bit on risk management. Now, that can be a very large topic. We're just going to focus on a few key aspects of risk management, but that's a really core aspect of any Bitcoin Treasury company. And lastly, we're going to talk a little bit about thinking about team, so capabilities, competencies, and potential org structures. So with that, let's dive into section 1 and let's talk a little bit about Orange Wheel. So really at Orange Wheel, our worldview is that there's this monetary transition ongoing, as many Bitcoiners are aware. We're on a transgression towards the broader economy, moving towards a Bitcoin standard. And this really represents a once in a species opportunity, and that all economic actors will be impacted over the coming years and decades. And ultimately, it's those investors and those businesses that embrace Bitcoin earlier that stand to benefit disproportionately from those who lag in that transition. And of course, there's risk and reward with that, and it really takes boldness and conviction to be able to kind of embrace Bitcoin at the right level. Then our mission is really then to help companies and business leaders kind of understand this transition that's ongoing and to apply it to their business so that they can understand how they want to move towards that Bitcoin standard and how they can realize competitive advantages. And ultimately, what that means for a business is understanding Bitcoin per share growth. That ultimately becomes a bit of a North Star. Bitcoin is the hurdle rate and moving to Bitcoin valuation. And then we provide services, ultimately we're acting as trusted guides to the business leaders and focusing on education, strategy, and implementation, and as well as kind of bringing in ecosystem partners as required. So kind of a double click on the broad sets of service offerings. In the top right here, talking about executive and board education. So really setting that foundational and aligned understanding of this monetary transition. In the top left, that's our focus on corporate Bitcoin strategy. So really understanding, it's our worldview that every business will have a unique take on how Bitcoin can be applied to that business given its unique circumstances. And so really we can combine classic strategy and consulting tools along with understanding the Bitcoin thesis and the monetary transition more generally to really craft along with the business leaders a unique and robust Bitcoin strategy for how to integrate Bitcoin into their business. In the bottom left, this is now implementation support. So taking those strategic frameworks, those decisions that are made in the strategy formulation, and then translating that into real action through support and project management, but also connecting our clients with the appropriate ecosystem partners to make those initiatives a reality. And lastly, in the bottom right, focusing on Bitcoin mining infrastructure. So we also have a pretty strong understanding of the Bitcoin mining economics and market, and understanding how businesses, particularly those in the energy sector, how they can implement Bitcoin mining to improve the return on their invested capital. So those are our broad services. With that, let's kind of dive into a bit more of the meat of the educational section here, starting with a bit of a broad overview of the types of Bitcoin companies. So we like to think of the world in kind of 3 broad sets of Bitcoin companies. Now, of course, there's a whole spectrum out there, and there's kind of a lot of diversity in how companies really want to apply Bitcoin into their business. But at the top level, we kind of use these 3 classifications. So the first are those that are primarily pure play treasury companies. Of course, the companies that I think we're most familiar with would fall into this category. The companies like Strategy, formerly MicroStrategy, MetaPlanet, the really large ones, Smarter Web, Capital B, and so forth. These are companies that are primarily using the capital markets and financial products yield the cash flow that would then be used to accumulate the Bitcoin. There's more to it than just that. I think there's a lot of innovation happening, of course, in that, but it's really a capital markets play primarily. Then we have operating businesses that have Bitcoin treasuries. And again, we see this primarily as using operating cash flows from non-Bitcoin related assets to generate a cash flow that can be used to accumulate Bitcoin. And some companies within the spectrum might choose to allocate a small amount of their free cash flow and retained earnings, and some might try to make Bitcoin a primary reserve asset. But ultimately, the source of the cash primarily is coming from operations. And then our third category is those that are more Bitcoin native businesses. So those that can develop a native Bitcoin yield through its operations, either through mining or through Bitcoin or crypto infrastructure like exchanges and so forth. So we kind of see this as, if you think about the cash flow analogy, these are more companies that are generating the Bitcoin through investing in the business. So kind of investment cash flows that yield a Bitcoin. So we like thinking of the world kind of cutting into those three broad sections. So just very quickly, pure play Bitcoin treasury company, we talked a little bit about this, but they're going to be issuing financial products to the capital markets, raising capital, accumulating Bitcoin. And then ultimately, I think the other fascinating thing with this business model is the perspective that in the long term, they might be able to provide additional financial services around Bitcoin as a collateral. So you hear the talk about strategy, but potentially becoming a Bitcoin bank. So that's an interesting kind of longer term perspective. But for now, it's a bit of a capital markets play, issuing credit instruments, providing attractive yield to those investors, and using the proceeds to accumulate Bitcoin. We talked about the operating company, but yeah, this can be in a broad swath of non-Bitcoin related operations. So anything from manufacturing to retail, it doesn't really matter. It could apply to any sort of business, but they're using Bitcoin as their reserve asset, as a complement, not a replacement for their core operations. And then lastly, we talked about Bitcoin mining or infrastructure companies that are actually generating a Bitcoin yield. With that, we'll go into the third section. We're focusing here on corporate structure. So the main topics that we think about when we work with our clients and we talk about structuring a corporation, we like to think about these four broad areas. So the first is, what is the entity type, the appropriate corporate structure? Now, this is of course going to be a bit dependent on what your starting point is. If you're a company that already is existing, you're probably going to have a bias to stick with the structure that you currently have. But you also want to think about a vision of what kind of company you want to become. And that might involve actually kind of some different restructuring of the legal and corporate structure of the business, right? But really thinking, if I want to get listed, for example, is the appropriate path to pursue an SPV or a SPAC? Is it about doing an organic listing? Is it a reverse takeover? Just as an example, right? So thinking about what's our structure today? Where do we want to go? What does that imply for changes to our legal and corporate structure? The second one is the listing venue. So again, this is assuming you do want to become a listed company to enable to access capital markets and issue financial instruments related to Bitcoin. Thinking about the listing venue is of course quite important, and the related capital markets that you do indeed want to tap. Then there's the jurisdiction selection. This can be linked again very much with where the business might sit today, if it already is an existing business. But for companies that maybe are starting from very, very much from scratch, there might be that question of saying, jurisdiction do we want to be domiciled in? And there can be of course tax implications here, but also thinking about the capital markets that you think are particularly untapped, not yet addressed, where there's still not enough exposure to Bitcoin by institutional investors, and maybe a low degree of competition as well. And then the last section is really thinking about ownership and control, right? So as you kind of bring on new investors, as you're beginning to diversify your shareholder base, and you're potentially also issuing different types of financial products, making sure that there's the nice balance between maintaining the right level of control amongst the executive and the advisors, as well as maybe strategic investors that really should have guidance, and what that also implies for your board structure. So those are kind of the four broad categories. We're going to kind of double click a little bit on the listing venue now. So where you are listed, especially as a pure play Bitcoin treasury company, really does open up the flexibility and optionality to access large capital markets. So certainly the US is by far the world's largest capital market. There might be dynamics that are kind of changing that dominance over time as we sort of see moving towards a more multilateral world. But certainly for the time being, and I think for the foreseeable future, getting access to the US is quite important. But I think besides that, there's also a question of what other capital markets outside the US might be to be able to access, and what does that imply for where you decide to list. Beyond that, there's also the question of requirements and how mature your company is when it comes to satisfying those requirements. And part and parcel of that is also the tiers of listings. So if you have the London Stock Exchange, for example, where we have support needs in getting listed there's a question of which tiers within the LSE are relevant for that business, or do we look at a different exchange in the UK like Aquis and so forth. Then there's also the accounting treatment. So this various exchange commissions of the world will have different expectations of what standards you have to report on, and those may have different implications for how they treat Bitcoin. accounting perspective. Now, it doesn't change the fundamental value proposition of Bitcoin, but of certainly how investors might interpret the performance based on how it's accounted for can be a factor worth at least considering. Ultimately, then it's the capital market itself. What's the investor base there? How much capital is there? What's the nature of the types of institutional investors that have access to that exchange versus retail investors? What types of products can be issued and what kind of appetite is there for those products? What other disclosure expectations are required? And in particular, when it comes to Bitcoin or digital assets, are there additional disclosure standards that need to be addressed beyond those of IFRS or GAAP? And lastly, what's the receptiveness of Bitcoin in this market, right? How exposed or underexposed is it? How early or late? What's the degree of competition and so forth? And then we'll just double click a little bit on ownership and control, right? And what are the factors to kind of keep in mind when thinking about ownership and control? So 4 kind of areas here. The first is, of course, your board composition and their fiduciary alignment. So really making sure that your board has the right competencies to support the business, that they have in general, they're well educated on Bitcoin. You, of course, don't need every board member to be deep into Bitcoin, but I think at least that they have a standard level of aligned understanding, and that they have the right incentive packages in place to be able to be aligned in the objectives of the corporation. Second category here is founder and shareholder control. So, I think ultimately ensuring that as founders, you can still steer the direction of the business as you grow your shareholder base. You want to kind of prevent finding yourself in circumstances where there can be activist investors that kind of commandeer the direction of the company, especially as we know Bitcoin is a highly volatile asset, and there might be those on board that maybe don't have the same degree of conviction. So being able to kind of keep the course of the strategy in times of high volatility. Then we have the capital structure, right? So ultimately thinking about the types, do we have classes of shares? How much debt are we using? What kind of debt instruments? What are the covenants on those debt instruments? To what extent might that compromise our ability to execute on our strategy? And I think, again, there's kind of that question about what kind of company do you want to become? Are you a pure play business? Are you primarily an operating business with Bitcoin Reserve? Because that will also certainly put some constraints and considerations on how flexible your capital structure really is. And then lastly, investor expectations. So being able to understand that, in particular, I think, if you're thinking about making a pivot from a non-Bitcoin strategy to a Bitcoin strategy, there's going to be investors in your current investor base that are, not necessarily on board with that pivot. Despite however much communication you make, I think you'll find that there's some investors that simply don't buy into the strategy and want an exit. And being able to then facilitate alignment with those expectations in a way where you allow a relatively seamless rotation of investors out and into the stock based on that strategy pivot. So really offering fair mechanisms. And I think strategy provided a pretty solid opportunity for its existing shareholders to be bought out when they decide to make that pivot. All right, so let's dive into section 4 and talk a little bit about regulation. Not necessarily the sexiest of topics, but one that's important nonetheless. So 3 topics that we like to discuss with our clients here. The first is just ensuring or understanding at least when companies might encroach into activities that might require specific licenses, right? The second one is understanding, again, if you're expecting to become a publicly listed company, what are those exchange-related requirements you have to be aware of from a regulatory standpoint? And then thirdly, additional compliance obligations that you might be in scope for. Particularly, I'm thinking here, financial service related things, KYC, AML, sanctions, anti-terrorism, this sort of stuff. What we think is, when we work with our clients, it's really important to understand if and when they might be kind of breaching their regulatory perimeter and encroaching into licensed activities. And there's typically 3 areas that tend to pop up when we're working. The first one is one that's, particularly relevant, especially here in Europe, where the regulators are still kind of like trying to understand and come to terms with what a Bitcoin treasury company really is. And there is this perspective of whether this really is a business or an operating company as such, or if it's beginning to be interpreted by regulators as an investment. A key distinction here, certainly, that we tend to find when we have discussions with regulators is just making very clear in the description of the business that this is a company that is managing its own capital and not acting on behalf of limited partners or investors, right? That being said, there's certainly some jurisdictions where they're still expecting, or maybe over time leaning towards this expectation that companies may need to have an operating business in parallel to the Bitcoin treasury activities that they're doing. So that's one thing to be really aware of. And we find having very tight and early discussions with the local regulators and listing venues could be very important in making sure that companies are on the right side of this. Or if they do find out that they need to have an operating business, being able to come up with something that satisfies the needs without drastically compromising the company's vision and strategy. The second one is maybe less frequent, but something to be aware of, trying to understand to what extent the company is embarking on regulated financial services. So certainly if the company wants to kind of move into into things like, or acting as a custodian. Lending, I think, is the primary one here, lending or dealing. They might be interpreted as basically being financial businesses or banks. So in most jurisdictions, this can be something where you're going to need to have a license to do that. Again, this might be core to your strategy. You might be a company that already has some of these licenses, but also wants to become a Bitcoin treasury strategy. And then you can, of course, continue to execute on these activities. But for companies that maybe are not yet having those licenses, it may become too large of a regulatory burden for you to access these activities in a compliant manner. So this is an area kind of just to be aware of when you start thinking about how can we generate yield, what kind of license might be required. And then the last one is the potential for moving into custodianship and intermediation, managing transactions. So again, trying to ensure that whatever your strategy you're deciding to embark on, that you don't necessarily get interpreted as being a financial intermediary, as this might require licenses that you would otherwise not want to have to pick up. Then we have some compliance obligations. Excuse the title here on the slide, it got a little messed up, but yes, there's kind of three areas here we discussed. So one is, of course, mandatory requirements when it comes to accounting and tax. We talked a little bit about ensuring you're up to the standards, whether it be IFRS, the local GAAP, or US GAAP, depending on where you're listed, as well as ensuring that you follow any related tax and VAT rules. The VAT is, of course, something kind of particularly here in Europe as well, where there's still important to kind of understand how to ensure there isn't any leakage when you come to VAT aspects on Bitcoin itself. We talked about being a public company and that having additional disclosure requirements. There could even be situations where there's ESG disclosures that are required once you become publicly listed. So it's not only accounting, tax, financial statements, but there can also be additional expectations in kind of non-financial disclosures. And then you should also be aware of making sure that you have policies in place to ensure that there's no insider trading or any other market manipulation that goes on once you're a public company. And then lastly, conditional obligations. And this again depends on if the types of services you might be providing, but you might be in line for thinking about AML, KYC, and so forth, right? So it's very rare that we have clients that are in this space, but there certainly are some that have been in discussions with some regulators that begin thinking, do we need to do AML, KYC on the Bitcoin that's been accumulated? But usually that's something that we can kind of address when we talk about the provenance of the Bitcoin being coming through regulated exchanges and so forth. Fifth topic. Okay, so next in line, we're going to talk about risk management. We discussed earlier about risk management being a very, very large topic for Bitcoin treasury companies because there are so many different dimensions of risk. But for the purpose of today's session, we're going to kind of break it down into four areas. So there's risk associated with the custody of the Bitcoin, risk associated with the governance of the corporation. So thinking about corporate governance, misalignment, these aspects. Then there's the insurance, which is kind of a sweetener in some cases. This is kind of a nice add-on, but really making sure you consider the role of insurance in the toolbox. And lastly, this is probably the biggest topic and one that you can go very, very deep into, but really thinking about managing the risk when it comes to the price and liquidity requirement, especially when you start going into relatively complex setups like what you see with strategy and increasingly with the more sophisticated setups amongst Metaplanet and others. When you begin having coupon associated credit instruments, you do have this kind of outflow of capital on a regular basis that places liquidity requirements on your business in line with, in parallel to the Bitcoin price volatility itself. So it can become quite an analytically challenging system to really apply sophisticated solutions to, but certainly a very, very important aspect of any Bitcoin treasury business. Let's start with custody. We're going to double click a little bit on the custody side of things when we dive into these topics today. So first of all, there's kind of a simplified spectrum here. Now, certainly there's a lot of different variants, a lot of different combinations you can do, but we like kind of working with our clients and thinking about this kind of spectrum of moving from least sophisticated to most sophisticated on kind of a 5-tier level. The first level may not even apply to most Bitcoin businesses, I would say. I think it kind of invalidates the core thesis of really holding the Bitcoin itself. But certainly one could consider just getting ETF or ETP exposure or some kind of similar synthetic exposure to just have the price aspect. This can, of course, provide many of the value benefits of Bitcoin and hedging and diversification benefits of having exposure to Bitcoin. But it doesn't really provide, I think, ultimately the value proposition to investors of really being a Bitcoin treasury. The next step for companies that just have small amounts of Bitcoin, they might want to consider just doing self-custody themselves. And this can be okay for small private businesses that are just beginning to accumulate a small amount of Bitcoin, maybe through accepting Bitcoin from their retail customers and so forth. But certainly not a bad place to start for certain businesses, depending on their context. Then we kind of move into more of a multi-sig, but still in-house managed. And this can be a nice next step up to kind of increase the security level without necessarily bringing in third-party custodians. Fourth level, we begin to actually bring in like institutional grade custodians that are third parties. So this, of course, can be the likes of BitGo, Coinbase even. There's many out there, and it's becoming a broader swath of options to go with. But certainly this provides a lot more level of security, but there's certainly of costs associated with it. And then we kind of move to more like a collaborative, multi-institutional, multi-sig solution, right? And this is probably the top tier when it comes to security. No single points of failure, and certainly a very flexible degree in terms of how companies want to kind of set up their own particular solution when we think about choosing different jurisdictions and different types of custodians. And certainly, I think where companies need to get to as they kind of get to a certain size of exposure to Bitcoin. And so here is just kind of some rough guidelines. When we work with our clients, we do a little bit of a diagnosis to kind of think what's the right level of exposure, what's the type of custody solution that's appropriate for them at the point that they're at as a business, and what does that kind of pathway look like to ultimately, when would they maybe consider moving to an upgraded. We talked a little bit about the ETF ETP, and really this provides maybe some of the price exposure and so forth, some of the benefits of Bitcoin, many of the technical benefits, but really not appropriate for a company that wants to embark on a pure play Bitcoin treasury strategy. Then we have the self custody. We talked about this, and I think as a rough rule of thumb, if we're dealing with less than $250,000, then self custody hardware wallets can be appropriate. When you start moving up to that 250,000 to 1 million euros worth, that's when I think at least thinking about multi-sig would make sense. And then bringing in kind of a qualified custodian. As soon as you're over that 1 million threshold, I think that's a relatively decent rule of thumb to think about. It's a material enough amount of Bitcoin to bring in institutional custodian and merits paying that typical AUM fee that provides those benefits. So that's kind of a rough guideline in that regard. And then the collaborative multi-sig. This really, I mean, in dealing with our clients, this is not really a hard and fast rule of when to move to that, but it's really more of a question of security they have in the solution and just that kind of peace of mind of knowing that there's no single point of failure, including the institutional grade custodian if you're relying on one single custodian. So we really see this as kind of the top tier for professional grade custody solutions. Then, last piece here on the custody bit, I would say it's just some things to think and keep in mind when doing your due diligence on a vendor. And I think many of us are probably aware of those that are kind of the leaders in the space, but irrespective, I think if you're going to be kind of starting from scratch and thinking about what custodians you have available to you, it's worth at least kind of thinking about these topics as you go into your selection process, despite their track record. I think certainly the track record and how you feel with discussions with the individuals that are going to be your custodians are very, very important. But beyond that, I think understanding the technology of the security system that they're applying in terms of managing the keys. In some cases, we've actually had our clients go out to some of these custodian sites where to actually see the operations, and that can be really good for customers to really understand what's behind the technology instead of just the front facing side of the business. So the extent to which you can kind of really get a strong understanding of the technical solution and the key management is I think, in our perspective, very informative and very useful step in the vendor due diligence process. Secondly, I think they're certainly making sure that they are compliant with all the regulatory aspects within the jurisdictions in which you operate. And then kind of additional services. So what else can they do in terms of making it user friendly? Are there any other add-on services that can be of value? Is there some way for, hypothetically, for example, that you can still access the coins and use as collateral while they remain in custody? That might benefit you in terms of actually generating yield while still benefiting from the custody security that they present. Being able to have audits. So certainly we want to be able to know there's proof of reserves and being able to communicate that with your own investors, quite important, of course, as well. And there's trade-offs there too. Some believe that, making that fully transparent also compromises security, but at least you'll have the ability to judge what information you want to disclose more broadly. But certainly you as executive managers want to be able to access that proof of reserves on chain whenever. And then lastly, do they have some additional insurances in place, right? So what's the strength of the company's own balance sheet if something was to go wrong? And have they insured any of the, they've segregated insurance? Do they have corporate insurance that can provide some additional level of security to you as a customer in the case that there's some sort of compromise to their security systems? And then leverage and liquidity. We discussed how this is, can be a very analytically complex system, depending, of course, on how much Bitcoin exposure a company has and what other liquidity requirements they're constrained by. But in broad strokes, 4 things you kind of really want to apply some analytical rigor to, right? So first is really understanding how much debt are you really taking on as an overall company and what's the nature of that debt. So really making sure you're not kind of going into irresponsible leverage or unintelligent leverage, as Sailor has talked about. And I think in these low market price environments that we found ourselves in for the last few months, we're really seeing that some of these companies that have gotten a little too exuberant on the leverage side are finding themselves in tough times now. And some of them even, I think, are on the verge of getting scooped up and getting their Bitcoin absorbed into more responsibly leveraged. But the second one is, again, looking at Bitcoin price volatility and understanding, can we stomach a bear market, which might have a 50% drawdown for 6 months or 12 months without going into a situation where our debt covenants are breached or we run into liquidity squeeze. You don't want to find yourself in a liquidity crunch in a time when liquidity is hard to come by. So understanding those price components components, potentially doing some Monte Carlo simulations. We've also worked with some clients and kind of done Monte Carlo probabilistic stochastic modeling to kind of understand under what's the probability that there could be a price movement that puts them into a liquidity issue given the nature of their capital structure today. So I think providing that analytical rigor really does give you some degree of confidence that yes, 95% chance that we're going to survive a bear market versus just kind of going on gut instinct. Then liquidity planning. So yeah, certainly making sure that there's always enough excess liquidity be available to satisfy the expected needs of cash. And then lastly, looking at if there is any funding mechanisms from counterparties, looking at the risks that some of your counterparties default, or that if you're reliant on exchanges or market makers or some other ecosystem partners, just making sure that those risks are effectively mitigated to the extent possible as well. Having diverse funding sources, having diverse trading venues, really being able to kind of mitigate these types of counterparty risks wherever possible. And that takes us on to the final section for today. So we're going to talk a little bit about team capabilities, competencies before we wrap up. So when thinking about a Bitcoin Treasury team, we've identified kind of six key or core capabilities that a company should have, and being able to succeed in these functions can really separate the best in class from the rest. So the first is investor communications. So especially now as Bitcoin Treasury businesses are kind of the new business model within the space, being able to effectively communicate to all your stakeholders, but especially your investors, what it is you're really doing, what your vision is, what your conviction level is, what your worldview is, and having kind of firmness on that underlying thesis really will help to build conviction amongst the investor base and ensure that they're also along for the ride. Secondly is fundraising. This is definitely a core component for pure play treasury companies. Really, that's the primary function of the game, is being able to raise new capital, issue new financial instruments to be able to ultimately accumulate more Bitcoin. So having those kind of capital markets experiences, having people who have worked in investment banks or can manage investment bankers who can help to structure deals, this is really a core aspect that you want to have in-house to the extent possible as you scale. We talked a lot about risk and liquidity management. I think as we talked about, having that kind of quantitative chops to be able to really understand what your accumulation strategy is, how hard you want to go on your leverage while still feeling as though you have resilience in your business. So folks that can really understand risk, understand price movements, understand how to mitigate those risks, potentially certainly setting kind of guardrails, but potentially also using hedging instruments that can really help set your business up for success. Then we have strategy and put it, Bitcoin strategy. I think as time goes on, we're going to see that strategy and Bitcoin strategy become kind of one function, corporate strategy and Bitcoin strategy, but really bridging those two. And especially for operating businesses, some of our clients, they have their operating business, they're in gaming, for example. We want to make sure that, the Bitcoin piece also integrates to the extent possible into their gaming business. So we can say, okay, Bitcoin is a reserve asset, that makes sense, but how else can Bitcoin kind of go into their business when you think about in-game payments? They can really differentiate them from their own peers within their respective industries. So really harmonizing Bitcoin and corporate strategy together is, I think, a core differentiator, again, especially for those that have operating businesses. We talked about custody and security. So you're going to have third-party custodians, so kind of doing the vendor due diligence, managing the custodians, doing the right selection, but also then having in-house, security more generally. I think that becomes a really important aspect. So cybersecurity more holistically, and within that kind of custodian selection and so forth. And then lastly, just general analytics, right? And being able to kind of be at the forefront of thinking, what are the right KPIs for valuation that I want to communicate to my investors? This is, as we brought up, as we're all aware, this is kind of an emerging and a new business model. And we're going to see new KPIs emerge that really help to explain how companies are performing that haven't really been seen by the financial analysts or the capital markets participants before. So really thinking about, how do we measure performance appropriately? What are the right KPIs? How can we prove this? How can we demonstrate our success vis-a-vis our competitors? And then ultimately be able to kind of tie that back to investor communications full circle. So these are kind of core functions that we believe are success factors for separating the best from. And I think, every company will have their own organizational setup. There's certainly not one size fits all. So this is just an illustrative example of what one company kind of could look like. But it's important to say that depending on the size of the company, the scale it has, and the people it has within its organization, you certainly want all those core capabilities and functions to have strong people within them. But it could be that one person wears multiple hats, right? So roles may be combined, and in some cases also outsourced, especially early on. But we would say that you have your CEO and managing directors reporting to the board, and then we would expect to have direct reports to the CEO across these 4 to 6 areas. So certainly having a CFO who's also most likely intimate with Bitcoin treasury strategies, who can then think about how to apply Bitcoin as the hurdle rate when thinking about capital allocation, thinking about financing mechanism, capital raising, and so forth. We talked about Bitcoin strategy, and again, this should be increasingly interlinked with corporate strategy for operating businesses. A chief security officer, investor relations, and then kind of more optional as companies get a bit more sophisticated. You can think about having risk management and analytics as other C-1 direct reports. So again, this is just to give a bit of an illustrative flavor for what a structure could look like. But we of course work with our clients to understand what their current system is, who the people are in the business, what sorts of organizational changes might make sense given their pivot towards a Bitcoin strategy. And with that, I want to thank you all for joining me today on this session. I hope this provided a glimpse into some of the primary considerations that a company should think about when making its first forays in towards a Bitcoin strategy. And I encourage anyone who wants to get in touch with us to learn more, to maybe have a free complimentary strategy discussion or just do some sparring, feel free to scan the QR code in the top right corner or send us an email to hello@orangewheel.com or visit our website, fill out the form there at www.orange-wheel.com. We have a team ready to kind of support you and hopefully assist you on your Bitcoin journey. So with that, I wish you all a great, wonderful day and look forward to seeing you in the future.